Today we're getting a bull breakout in the stock market as big tech is continuing to lead the way higher. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So first up, if you have ever considered being a price action trader, you should come check out the Stocks Channel Discord where we are absolutely crushing this market. There's a lot behind following price action day to day with the intraday updates in day trading and as well as planning ahead of time for swing trading that you're really missing out if you're not part of the community. So if you've never tried the Stocks Channel Discord or you've been a member in the past, this is a great time to come check it out. There is a link in the description of this video. Alright, so today SPY was up 1.45% and we did get the gap up and we closed near the high of the day on the bull breakout above the top of this range at 400. So just yesterday I was talking about there being a good possibility to bounce off of the 200 daily moving average where all of these moving averages were stacking up at 395 and test the top of the range. Now when we test the top of the range, we needed to get rejected from that to go back to the bottom of the range, but instead we did get confirmation of the bull breakout. However, when you get a breakout, you do want to be cautious. It's not a false breakout, so we will want confirmation tomorrow that we can close above 400 for a second day in a row. You don't just want to chase a breakout on day one because it could have just been a short squeeze through resistance and there's not actually buyers above this level. So don't get whipsawed tomorrow. You still need to manage your risk right here at 400. Otherwise, we will be looking for this gap fill below at 396.5. Now, don't assume that gap has to get filled because we also do have a gap up here above 408 and we have no way to know which gap is going to get filled first. So you always follow price action. On the bull breakout above 400, there is a better chance we go fill the gap first to the upside and then at some later date possibly come back down and fill the gap to the downside. Now, if we do get rejected and fail to hold above 400, then we're looking for the gap fill to the downside, so only price action can guide us on which gap will fill first. Also, when we get over to the triple Qs, you're going to see we also have the big tech breakout, which is more than likely going to help push SPY higher as well. So right now on SPY above 400, we're looking for the gap fill at 408. And if we break down below 400, then we'll be looking for the gap fill right around 396. On the NASDAQ 100 triple Qs, we were up 1.82% today. And just like SPY, we had another bull breakout to another daily higher high, which was that breakout above resistance at 312. We also had the gap up and go day where we did not fill the gap to the downside, which is this gap fill at 308. Now, also like SPY, we have a gap to the upside, which has not yet filled, which is up there at 322. So don't think we have to go fill the down gap because it is possible we fill the up gap first. Also, keep in mind above the neckline breakout at 294, we still have this double bottom price target at 327. So there is plenty of room to go higher now that we're getting the bull breakout. And this is more confirmation. The big tech sector still has the bull trend with another daily higher high after putting in another daily higher low. So we have the higher low off of 305 and the higher high above 312. So this is still a very powerful bull trend. You can also see the bull trend in the moving averages. They're all positively sloping and they all have separation, which tells us it's a very powerful bull trend. So manage your risk as bulls right here at 312, which is the bull breakout. And then below that, we can manage risk around the gap fill zone at 308 and the support zone between 305 to 306. On the Dow Jones, we were up 1.01% today with another bull breakout in the Dow Jones, which was this break above the resistance trend line, but I would like to see another confirmation with the break back over the 50 EMA right around 328. So this is starting to look like a Dow Jones bull breakout as well, but we need to hold the breakout above the resistance trend line. Otherwise, it's still possible to fill the gap down here at 322. So look for critical support between 324 to 326. Otherwise, we're looking for the gap fill at 322, with the next bull breakout being back over the 50 EMA at 328. And then we should start running higher towards 335. On the Russell 2000 IWM ETF, we're up 1.14% today, and we have the third day in a row closing back over the 5 EMA, and we're also closing back over the 13 EMA. Now, there is a big test of resistance right around the corner at 177, which is also going to be the negatively sloping 20 daily moving average. So we really need to see a clean break of that resistance before we're getting bullish for the gap close at 181. A rejection from 177 should send us all the way back down to fill the gap at 172, but there is the chance we get the bull breakout and go fill the gap at 181, so follow the price action at that resistance level. On the ARKK ETF, we were up 3.76% today, and we're right back up towards this critical resistance zone at 39, which is the lower low breakdown, which means we are still in a downtrend while we're trading below 40.5. Cannot rule out the possibility this is a double top, but we need confirmation by breaking below the neckline at 36. So if you're looking to get bearish, you might want to wait until we break down below that neckline, and then we'll be looking for the gap fill at 32. If you're trying to get bullish, you need to manage risk right here at 38 because we have resistance at 39 and 40.5 before we can make a higher high in the ARKK. On the VIX, we were down 4.26% today as the VIX is crushing back down below 20 for the second day in a row because yesterday we were also down below 20. And you can see very clear shift in behavior with the VIX this year because we have spent a lot of time below 20. That is why we have a bull trend in the big tech stocks and the triple Qs continue to break out because we are seeing fear slowly but surely leaving this market. So in a bear market, typically low VIX means we're near a top, but this may not be a bear market and a lot of people are still calling it a bear market, but we don't have any clear evidence that we are still on that same downtrend that we were in last year. And big tech continues to make bull breakouts, which eventually is going to cause the S&P 500 to rally as well. On Bitcoin, we're currently up 3.62% as Bitcoin is right back up to the resistance at 28,000. A bull breakout above here could take us to 30,000 all the way up to just below 32,000, but do not rule out the possibility this is strong resistance and we could still get rejected. We do have the bull trend as long as we're above 27,000, and if we break 27,000, look for a retest of the breakout at 25,000. On Google stock, we were up 0.36% today as Google is trying to find support right here at the 200 daily moving average, which is between 101 and 102. As you can tell, the rising 20 daily moving average is coming up to support price to push higher. So I am looking for Google to put in a higher low before we go put in the next higher high, which is likely going to take us to 110. We have strong resistance at 106, so that's the level we need to break. But we also have strong support building up here right around 100 and possibly as low as about 98. On Amazon stock, we were up 3.1% today as Amazon is getting the strong bounce off of the 50 EMA, and we can see the rising 20 daily moving average is getting ready to cross above it. That is going to look like a bull trend as long as we're above 98, and the critical resistance we need to break is 101 to 102, and then we should see a very sharp rally up towards the gap fill at 109. So I'm bullish on Amazon as long as it's above 98 with confirmation on that breakout above 101 to 102. Strong downside support remains this zone between 94 and 98, and essentially you have support every $2 lower. On Microsoft stock, we were up 1.92% as Microsoft is back above all of the moving averages with the price action in this very powerful bull trend that is very likely trying to close the gap above 285 and possibly even reach 290. We also did gap up, so we have a gap to fill to the downside at 276, but we have no idea which gap is going to fill first. So get more bullish on Microsoft if it can break this daily high at 280.56. Downside support will be 276, 274, and 272. On Nvidia stock, we're up 2.17% today, and we are continuing that bounce off of the support at 258, and we're back above the resistance zone at 267, which means we're very close to retesting the highs around 274, and if we break out, we're looking for 282.5. Stay bullish above 258, and if we break 258, then we'll be looking for a trip back down towards 242. On Tesla stock, we were up 2.48% today as Tesla is starting to look like another daily bull flag, just ping-ponging between the gap fill at 186 and the resistance at 197. Look for a test of that resistance as early as tomorrow, and if we get the bull breakout above 197, we'll be looking for 208 and then 215. If we get rejected from 197, look for a retest of support at 186, 183, and then 173. On Apple stock, we were up 1.98% today as Apple gapped up, and we have the bull price action above all the moving averages with the strong bull trend, and we're very close to reaching our price target at 163. Above 163, we run to 169 to 171, and if we get rejected from resistance, we'll be looking for the gap fill at 158 and strong support at the neckline breakout at 156. Just a reminder, with this bull trend, we also have the inverse head and shoulders breakout, so we are very likely going to see Apple climbing higher, which is going to bring the rest of the market higher with it. On the financial sector, we're up 1.46%, very close to the resistance at 32, and if we get the bull breakout above 32, look for the trip higher to 33. On the industrials, we're up 1.46%, reaching that resistance right there at 100, which is the 50 EMA, and we need to break back over that level to continue to climb higher and continue to build on this double bottom look. On the healthcare sector, we were up 0.28%, still finding support above this 20 daily moving average, which is starting to turn the corner, which could support the buyers and push the healthcare sector back up towards 130. The energy sector was up 1.39% today, pushing towards that next target higher at 82.6 because we do have this double bottom breakout as long as we're trading above 80.5. So jumping back over to the S&P 500, there is a lot of bullish breakouts occurring today, and we just need confirmation that they're not false breakouts to continue to rally higher. Remember, the VIX is crushing down below 20, which is telling us fear is leaving the market. At the same time, we're starting to get bullish price action. So So make sure you have no bias and that you're following price action, because the market has been consolidating for many months and we are about to see a very large move, and you do not want to miss it. And you do not want to be on the wrong side of it. So if you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. You can find out how to join the Stocks Channel Discord by clicking on the link in the description of this video. I also have my own trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You'll find out how to join Bank by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.